All right. And so, good morning. And today's Thursday, and we're back again. And the story continues to be oil. Let's not kid ourselves. I'm not going to kid myself, and I'm not going to kid anybody else, but that kind of is the entire story. I think it's all bullshit, but nonetheless, it is what the story is. We made highs yesterday, a pretty big spike up to 95.98. Currently trading 91.46. So I'm assuming that overnight news was relatively uneventful as crude continues to kind of taper down this morning. Equities, however, are having a little bit of a rough problem. I know we had a pretty big, if you look at the ES last night, we had a pretty big gap down last night. And we move over to the 4 hour, it's a little more evident, pretty much touching that S3. And anyone who went long last night on that touchdown there actually is probably getting paid pretty well. Now, I know over in the top step world, I was watching slow markets last night, and hats off to those guys. They actually did get long. They were trading the NASDAQ, and they actually did pretty well on that trade. Although it didn't work out right away, they hung in there, and it had a pretty nice bounce. Overall, though, I do like what I'm starting to see in these markets. They are, even though we are getting these big gyrations, they do feel like they are starting to trade a little more normal. And I say starting. I know I did a number of trades yesterday. I ended up losing like $30 overall, and I considered that a win, and I walked away. The market was it's been really rough for me, for my style of trading, because anyone familiar with how I trade is my objective normally is when my trade goes 15, 20 ticks to the positive, I'm looking to rip that stop up to break even and let it run. And then I'm usually looking for, about a 1 to 3 or 1 to 4 risk reward and get the hell out. You're just not getting it. You need to just kind of take what the market's giving you. And it's very difficult to leave trades on as the volatility in this market is just leading a lot of trades to get stopped out, at least with that strategy. So, and then, I know there's people who are, well, why don't you change your strategy? It's like, well, why? You know what I mean? The strategy that I have works 90% of the time. It just we happen to be in a market now where it isn't working. So I'm not going to just go change what I do to conform to the market, because I know the market will eventually normalize. I've been through this drill a number of times in my almost 40-year trading career here. And so, and I always find when you try and change what you normally do that works to try and find something that works, usually that's when you get just blown apart. And so to me, I'd rather just take it that, I'm just going to have to be patient. And, I think patience will win. Because as you can see, last night we had a perfect touch of S3 and a beautiful, beautiful bounce. Now, unfortunately, didn't take that trade. But, and we are starting to see more and more of these types of setups. And so if I'm looking today, there's a number of spots that I'm going to be looking for today. One spot in particular is going to be up here near yesterday's high. And also this R2. And yesterday's high is running about 68.23 or so. And R2 is at 68.29. So I am actually going to move my alert down on that. 62.29. I already have an alert set, and it actually happens to be right at or near R3, which is 68.56.75. So that's where we're at on the upside. I may even look to possibly take an opening trade, if it works out, up near this pivot, 67.84. And now you might say, now I don't normally take trades around the pivot, but in this case, since we had a big gap down early morning and we have been rallying back to an extent, it supported control. It's also the pivot. It was also an area where yesterday, from a swing perspective, we couldn't break out through that. You can see on the 1 hour, we literally painted 1, 2, almost 3, 4 candles up here at that level. So I have to believe there's some significance to it that, there may be room for a fade in here. Now, again, a trade like this, I'm not going to be looking for. A huge runner on this. This is really going to be a fade trade. Have this get up here, short it, and then look to take 15, 20 ticks tops. And perhaps have it even retrace back to S1, and I'll be gone out of there. So it's going to be a pure scalp. As most of my trades are anyway, but this would really be looking for a true scalp, looking for maybe, like I said, 10 to 15, 20 ticks tops, depending on how it gets there. But again, that is more related to the opening. So I'm going to be looking for, some of these to start moving up near here toward the open. All right, on that pivot. And that is pretty much it on the ES. But one thing I would like to do, so if we actually go and we draw back and we get rid of those just so they're not in the way, and I refresh this and I kind of back out. And I think I mentioned it yesterday. I'm normally not a overly bearish person anymore. I used to be. But I'm not anymore. I cured my addiction. But I used to be so overly bearish that everything that I did was related to being bearish. Whether it was trading, whether it was buying options and trading options, it was always from a bearish point of view. And I've kind of, as I said, last 3 to 4 years, I've kind of flushed that out. And I feel like I'm a lot more balanced in my approach. And I am feeling, though, right now, that barring any catalyst of any type, the market looks bearish. And again, I'm not leaning on this to collapse, because this market has been extremely resilient. And I don't see why it shouldn't be. Companies overall are reporting pretty solid earnings. Companies are not really in dire straits. There seems to be a lot of M&A activity going on as well. And there's overall the economy appears to be relatively strong. Now, it depends on who you talk to, right? I mean, everyone, no matter what your income bracket, is feeling the strain on themselves for, with taxes and property taxes and utility bills and all that kinds of stuff. Everything that's pretty much out of a lot of people's power. But overall, things in the economy are relatively well. But I think the market is really in a spot where, again, I said, barring any catalyst, I kind of going to lean on that the market really is not going to go anywhere and really, kind of has the potential to kind of retrace these levels from back in December when we hit 65.25. And I have that marked here. And I'm really going to be watching that. And a lot of my trades that I'm going to be putting on are going to reflect that going forward. Now, there are going to be some stocks that I'm going to be overall bullish on. But as far as the market's concerned, I think it's a good idea to be diligent on what you're trading. Don't just buy stuff crazily because it's down, because these stocks can stay down. And I'm speaking of the Microsofts of the world, a lot of these software companies that are in this IGV as well. I just don't see that turning around really fast. And if you look at I said Microsoft. If you look at Microsoft, the chart looks absolutely awful. It really does. I mean, I don't care how you slice. This is a daily chart, but if you were to zoom in on this to a more recent area, this chart looks awfully bad. Is this the bottom? Was the bottom in at 381? I mean, who knows? We have not filled this. We have this huge gap here from 425 all the way down to 397. And we haven't even filled it yet. Because you've got to fill the gaps. You've got to fill the gaps. You got to fill the gaps. As they always say, you got to fill the gaps. You got to fill the gaps. And we have not filled that gap. And if you look at, going back, Microsoft was $550, was it? Yeah, $554. Pretty classic double top here, real fast, right? As far as like charts are concerned. And it was up and it's been down, and it's been a pretty quick fall from grace. And so I don't know if it's just going to be a quick hit where this thing's just, could it happen where, Microsoft's kind of stock where any given day it could be up 25 or $30 in one day, and it could be down 25 or $30 depending on, the news and everything else. But I'm not sure that actually happens because it has a lot to go through from a stock point of view. And I'm using this as an example because I believe Microsoft is kind of going through a lot of what some of these software names are, and it's kind of tied to these software names in general have had a worse showing than Microsoft, but Microsoft's been pretty bad. So you have like Workday, Datadog, CRM has just been an absolute piece of dog shit. It doesn't even look recoverable. CrowdStrike, I have that one in here. Snow is another one that's actually had a lot of issues trying to get out of its own way. MongoDB, they just absolutely murdered this one. And this is kind of I have it under cloud play. I think Mongo is more of a cloud play than it is software, even though it is kind of software. They're more of a cloud play because they, all their stuff is mostly in the cloud in general. But anyway, there's another one that they just absolutely massacred as well. And I just don't know if they're just going to come roaring back as fast. I mean, it just looks to me that if you were to go back in time, and if my memory serves me right, I think it was back in it was back in 2022 from 21 actually all the way to 2022 where Microsoft just couldn't get out of its own way. And I think we're in that kind of period. And it seems to be a bit worse. But if you were to take this, you could probably take this area of this chart and push it back here. And we're about, from my opinion, we are about like right in here on this chart. So again, I'm saying that there could be some more, a little more downside on this as well. And it might take a little bit more time, which I think it is definitely going to, barring any catalyst, right? Something could come out next week where they say, you know, all these cloud providers, whatever it is, blah, 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 they're going to make billions and billions of dollars because of blah, 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 whatever it is. I don't even know. And that completely changes everything. So anyway, just be aware of that. And that's why, I mean, and then we'll talk about weighting, right? The weighting of the S&P is ridiculously skewed with a lot of these big names, the Microsofts, the Amazons, the Googles, Meta, Nvidia, Apple. I mean, it's so incredibly weighted down with those stocks. I mean, you can't not take a look at what's going on in that software space and with some of these big tech names and translate that into like that the market is really going to need to have those stocks do okay, right? Not even great, but just okay to keep it in a bullish context. Anyway, that's my bullshit macroeconomic outlook as far as the market is concerned. And I'm using the S&P because that is probably the benchmark index overall. I mean, let's face it, really can't use the NASDAQ as a benchmark, in my opinion, because it's too overly weighted in technology in general. But that's kind of my take on things as far as the market is concerned. So there's some levels I talked about too. I talked about some levels in the ES. So let's get over into, take a look at gold. Now, gold has been a bittersweet type of situation. If you've been actively buying the dip in gold, you've been doing pretty well. And the only reason why I know that is because I have been buying the dip in gold. Not crazily. I'm using the GLD. I'm using the GLD as my surrogate. But I have been very small, adding on significant pullbacks. And you have been getting paid on those. However, of late, and we have a lot of resistance down on here on this line. I mean, I advise you to put this on your chart if you don't have it already. It's the highs from Wednesday, January 26th, and then the highs from March 26th. And I'm using that as a resistance area on gold that it needs to break out of and break back up over that, and then use this line for support for it to really get back into a bullish flavor. Otherwise, there could be significant chop going forward, which is likely what's going to happen because it is running out of steam. You can see these big dips. We've had some huge rallies off these dips, but the rallies are starting to dissipate, right? And then we had another pullback, and we've kind of chopped, another pullback here, chopped. So we're getting to an area here where there's a lot of resistance kind of starting to show its face. And so just be aware of that, and that we could be due for either again, it's at an inflection point where if I knew, right, if I knew I'd be a gazillionaire because I'd stick all my money on it and then just like ride the wave. So we're in a point where it's either going to, again, break out up here, or it's going to hit its head and begin to pull back. So that's kind of my shtick on gold. Being ultimately, a year out, I'm actually bullish on gold. So, and then if you really want, you kind of have what they call in like a Dorito type of thing here, where you can actually draw a line from either here or here and go up here, as far as chart painting. But I don't like to mess the charts up that much with a whole bunch of lines that once they kind of break and you get past them, they don't wind up meaning anything anymore. But this one I do think has some significance, only because, again, you got these highs up here, right? And we have not been able to get, and that was kind of the peak. And then we had a massive, massive drop from there. But then we had yet another one, and the drop was not as bad. But we have been scaling up, right? Higher low, higher low, higher low, higher low. Now you could even mark this one higher low. And this is a 1 hour chart. So, and then even here you can even mark higher low. All right, so that's kind of the story in gold. And then last but not least, well, actually not last but not least, I'm going to actually talk a little bit about bonds. But if we look at crude, this has been just an absolute mess. I mean, we sat for literally months and months and months between 50 and 60. And, and now all of a sudden, now we're like literally between 80 and 90. Now we're 90 and 100. And I have not even traded it. The only thing that I've been doing, and I mentioned it yesterday, is I still believe that going out past April, I think April or later, April, May, I think if you play a little long ball here on crude oil, I think it's one of the easiest kind of lotto trades that you can make for it to go down and go down. My target is $70, $70 to $75 is around where I feel like the market wants it to be. Because at $70 or $75, I think everybody's happy. Producers are happy because they're making money. Shippers are happy because they're making money. Consumers are happy because gas prices are not ridiculous. They're reasonable. And the one thing a lot of people got to understand too about gas prices, how much of the gas price in your state is tax. And that's one thing that I think gets misconstrued on gas prices overall, because I know I live in the communist state of fucking New Jersey, and like they fucking tax everything. And we have like a 50 or 60 cent gas tax. And so, but nobody talks about that. And in the state, when gas prices go up, nobody ever in the state says, you know what, maybe we should roll back the gas tax. Because, that'll keep prices down. No, they never fucking do that. You know what I mean? So it's kind of like, it's one of those things where, they'll all complain about it and say, no, well, then roll back the gas tax then. If you really want to help people, roll back the gas tax, you fucking scumbags. No, but they won't. They won't do that. In any state, they don't do it. And anyway, needless to say, that's kind of the story there. So that's what I'd be looking for, again, out in April. And, it's not just me saying that. If you actually go and look, and I don't think the place to play this is in futures options, folks. If you're comfortable doing that, by all means, go ahead. But I would stay away from options in futures because of this volatility is just absolutely insane. But don't take my word for it. Look out on the curve. And when I mean look out on the curve, look at the expiration, right? There's different expirations in crude oil, right? It pretty much expires every month. There's a new contract every month. And if you look out all the way into June, the June contract's trading at, like, the current contract or the front month is at 91.54. But April's is at 90, right? May is 86, but then you go out to like June and we're trading at 83, and then you go all the way out even to August, September. We're back in that area where I believe that the price is going to land is in this 76 or 75. And that's where I'm coming up with that number. I'm not just pulling it out of my ass. Okay? And so to me, the markets are telling me, 6 months from now, this is about where crude prices are going to be. Now, will they? I don't know. But again, the market is kind of forecasting that. So who am I to question what the markets are doing? The markets are relatively efficient. So I'm not going to. So I think that's where you need to have your eyes on crude oil and get past a lot of the bullshit headlines because, and look, I'm not going to deny that, like, there's a lot of bad information that's getting circulated around. We have politicians that come out and say one thing, but then something else happens. And I think the problem is I honestly don't even, like, as much as I don't trust politicians, I don't think they want to say anything too good about what's going on until everything's settled and finished. That's my opinion. And I think that's why everything's been so tight-lipped. And I think we're kind of the source of our own problem because with the information age and having access to information so readily and people kind of like starving for information, what's going on, they're accepting anything that somebody says and it's not just this has been going on, but I think this is exacerbating it to the fact that, anybody who says anything, they find somebody and they're like, oh, really? Is that what's going on? Oh my God. They're not telling us anything. It's like, we're at war. We're bombing a country. We're supposed to come on every day and say, oh yeah, we wiped out this neighborhood. We wiped out this, and then tell them our game plan. So that, they know, I don't understand people. You know what I mean? I don't get it. I mean, when it's over, we'll know it's over. And when we know it's over, crude oil will be back $75. So again, that's kind of the heart of the matter. Just watch the markets. And when you see crude oil back in the 70s, this thing's over. Anyway, that's it. That's all I got to say about it. And again, the only way to really play this is in the USO. Because I wouldn't do it in oil stocks, Exxon Mobil, because I think they're actually going to do, unless you're going to go long those stocks, you're not going to short those stocks because oil is not going to go back down to $75 and then those stocks are going to fall off the map. I don't think that's going to happen. I think those stocks are going to continue to do well because overall, the oil market in general, when this thing is all over, I believe is going to absolutely explode. It may even be like another renaissance of oil. Going on, I believe. Again, that's just my belief, and that I think, oil stocks will be, back where they were 20 or 25 years ago, where you just own those and you're going to give them to your kids. And I think, we have that. I think we're in that phase right now where if you're not accumulating good quality oil stocks right now, I think you're doing yourself, even though I know a lot of them are really high. I know it's tough to swallow, but to me, I kind of see this as being like a renaissance for oil going on for the next at least 5 to 10 years after this is all over. So anyway, the only way to really to do this is to use this product, USO, and use the options. And like I said, I'm in some April stuff. I'm likely to do some Mays. I might do some Mays today. I'm actually treating these all as lottos and stick to the only advice I would give you on these is just do simple put spreads. Keep it cheap. Don't spend a lot of money, and definitely go out of the money. Definitely go out of the money. And like I said, I'm in 80s, I'm in 90s, and then go out of the money, but stick to where the volume is, right? And so if I'm looking on the curve here, I'm out in May, right? I'm going to be looking at the 95s. I'm going to be looking at the 90s. I'm going to be looking at the 85s. And let me see where else we can actually, and it looks like the 80s have good volume. And then after that, it pretty much tapers off down to the 70s. So again, stick to the contracts that have the most open interest to give yourself the most amount of liquidity. I might as much as go and say, you know what, out in May, I would just go out and buy a May 70. And again, for $150, it's a lotto. I got $64 for this thing to kind of, and this can all come in one. The thing is with these, this could all come in one day. Or it couldn't. But again, it's a lotto ticket. It's a lotto ticket, and to me, it's a cheap lotto ticket. For $150. And now, if you really want to cheapen it, and there's a $5 wide for 50 cents, 50 freaking cents, $50, $57. Call it 60, just to make sure you get filled. Call it $60. Now, look, you got a 16% probability of profit, but look. This thing's inflated to a point where it's just insane, even the IV rank. I would avoid selling options in here, though, especially in this product, because I don't know, my experience with selling options in this thing, I've never really experienced, when there is a volatility collapse, I've never really felt like the option prices collapse relative to what the IV rank is. Again, just my opinion. I always found it easier to just be one-sided or be directional in this and either buy puts or buy calls. But that's kind of how I'd play this, and I'm going to continue to play that. And again, these are all lotto tickets, and they're cheap lotto tickets because, look, if you're wrong, and put it in perspective, if you have a portfolio of stocks right now, right, and you're weighted, right, in your beta weighting, which means like the weighting on your account relative to the indexes is 1 or 2.5. If oil prices come down, your equity prices are going to go up, most likely, right? If oil prices begin to come down again, you're going to see the market rally and stocks go up. And you know what? Even if this doesn't work out, you know what I mean? What are you really risking? So you could really, make, the thing is, you could really make bank on this and you're not really lose a lot of money. The risk reward is just there. So anyway, I kind of beat that to death, but that is kind of how you play this one. And just the other thing too, is when you're picking the strikes on these monthlies, right? So like you got like showing May, April, June, just look at when you look at these, okay, and you look at that month's option or a futures contract to make sure that you're kind of around where the price of oil is trading in that contract. So in other words, if I'm looking at May, I'm going to go to the /CL, and I'm going to look at the May contract is around $87. So I know that at $87 in May, And this is not a 1-for-1 either, but you kind of have to extrapolate. I know at $87, I'm going to be around, here's 80. So I want to be around $85 or so. Now, again, this is not 1-for-1, but you want to be close. That's kind of how I would do it if you want to pick where to be. All right. And so that's kind of the story there. And I continue to think that's kind of the best trade on the board, I think, going forward. And then last but not least, bonds have gotten absolutely they have gotten kind of beaten to death through all this, which is kind of, I'm finding that a little weird. And then I know there's going to be a ton of people that say, "Oh, it's because nobody likes the U.S. anymore." Blah, blah, blah. It's like, dude, shut up. Like, shut up. This happens all the time. Like, this. It's not because people. Look, there's tons of people that don't like us all over the world, but they still use our investment vehicles because they're the best in the world. So shut the fuck up. You have no idea. Money is about money. It's not about anything personal. And that's the difference why you're a fucking whiny piece of shit that complains about everything and hates this fucking country because you don't have any idea how money is money, and people don't care about your feelings with money. This is something systemic. And the reason I say that is that I believe what's kind of going on here in the bond market is I think there's a bit of like rotation going on between the 30 and the 10 year. I think there is a lot of rolling going on where people are rolling out of the 30s and buying 10s. And they're shortening duration. And the reason they would be shortening duration is because they believe interest rates may kind of tick up a bit, and they have. And so, another trade that I'll admit this too, that, 2 years ago, I was completely wrong on the bond market. I went in pretty hard, and I was absolutely wrong on my bond trades. I went in hard. I thought the bond market was going to, and it turned out that about 3 months after my positions were all fucking done with, the bond market rallied, and it eventually did what I didn't have the staying power. So I completely messed up. But I think this go around, I do think the bond market is a decent place to be right now. And I did do a little bit of buying, and I'm using the TLT. As you can see, I'm out in September now, and I'm also out in January. So again, this is another one that I'm kind of looking down the pipe. I'm not doing anything short term. I'm going out September, and most recently I went to January. And I think that's a good place to be. The other thing about the TLT is it pays a pretty good, the other, I guess, it's kind of a good and a bad. I mean, a good thing is if you have it in an IRA, you don't have to worry about the dividends, but it does pay a pretty good dividend. It's up to almost 4%. That could be a bad thing if you have a taxable account, right? Because who the hell wants to pay tax? But I think that a good portion of the interest on these, since they're treasuries, is not subject to federal taxes, but it's subject to the state tax. And in my case, in my state, we have to pay for people who aren't here legally. We have to pay taxes to support them because the politicians told us that was the right thing to do. So anyway, that with that being said, again, I'm looking down the pipe, and this is another one that if you look here, I'm in these what I'm calling like lottos. I'm kind of just scaling in out here little by little. All right, and then I'm just, anytime we get a bit of a pullback, I'm just kind of adding. Now, you have no real liquidity issues in this thing. The TLT is extremely liquid. It's probably one of the most widely, next to like the SPY and the QQs, it's probably one of the most widely used instruments by not just retail, but even institutions, and that's kind of true here when you just look at the open interest on some of these contracts. It's absolutely insanity, right? You got 68,000 contracts here at the 85s, and the other side to this too is you have to realize is that this instrument is used a lot of times in the institutional world as a hedge. So if they're overall long, let's say they're long treasuries, they might accumulate short positions in this instrument in the options to hedge their position. Okay, so just be aware of that. But the main point is that this thing is extremely liquid. And you're not going to have a problem getting out of stuff if you need to. But that's where I'm looking on bonds. And do I think it's over yet? Not really. I mean, I'm hopeful that this is kind of the bottom here. I mean, we've kind of, we retraced all the way back up here to 120. And then just since this whole Iran war thing, we're kind of back down in the bottom of the range where we were back from even December when we did begin to rally. So I don't know if this is it, or we continue to have, but that's kind of my play, and that's kind of where I'm looking. And if I was to put something in the sand, I mean, I'd kind of look here and then say, maybe here we did kind of make a bit of a double bottom, and maybe we will rally. But this is another thing that, once oil prices start going the other way, you'll see bonds start to rally again. All right, and so that was it. I kind of beat the shit out of equities, and then overall, when I'm looking at stocks, I really have not been looking at specific underlyings outside of like my core holdings. And my core holdings are Apple, Tesla, Netflix, and Palantir. Those are my core holdings. Those are the stocks that I have the biggest positions in as far as stocks. I have been leaning toward, from a stock perspective, I have been leaning toward adding to my ETFs. And the ETFs that I like the most right now is XOP. Unfortunately, the thing is kind of, in my opinion, it's kind of getting away from me now, where I'm almost have to just close my eyes to buy it, because I don't like to buy anything when it's at or near. This thing is crazily near. I want to say this has got to be the all-time. I think it is. I don't know. Let me look at a 1 month. But yeah, it is. No, it was up to 336 at one point back in 2000 and looks like 2014. Okay, so it is not nowhere near I thought it was. But again, this swing high here from back last year has me a little, again, I'm not like quaking in my boots, but it has me concerned that, that is there much more room left in this thing? And given the circumstances right now, you would think otherwise. But, again, I have to look at it from a realistic point of view. It is getting a little toppy in here, and it's kind of due for something, before I add. But anyway, that's one that I've been adding to reluctantly here, which I'm well aware that could probably turn on a dime on me at any moment. And the other one is the XBI, which I've talked about before. And this one has been going through a little bit of a consolidation here where it's been chopping in this range. And I kind of like it in this spot. during this consolidation, because it does have an enormous amount of room. All-time record highs like 174. We're sitting at 126. We were at 131. So we have had a pullback, and it's actually, the price action's been really good and sustaining here. So there's another one that I've actually been adding to as well. And I'm just finding it a little easier to trade sectors right now than try and pick stocks, because, honestly, picking stocks sometimes is a pain in the ass. Unless it's like one of the biggies, right? Unless you're just, and then, what benefit? There's another stock that I'm seeing in the news, and that's this NBIS. And, there was an announcement. I think the news was that NVIDIA, I think, was going to, pledge $2 billion, all this other stuff. I don't know. I'm not sold on this one. I know it's kind of, it's gotten this big pop. I don't know. I've been wanting to look at it. Maybe I'll do something tomorrow on it. If I were going to do anything on this, I would likely, given where volatility is on this, I would likely be selling calls up and above 140 on this, and selling puts down here around 80. Let me look at that real quick, and then we'll wrap this up, because we've traded this one last year quite a bit, playing that game. And if I would do anything in here, I'd probably go out to June. And there is actually pretty good volatility in here. And, I kind of like something like this. And the premiums out here are absolutely awesome in this 140 to 145 range. But I would be looking to do something like this. I would even go out to a 150. The 150 looks perfect. But something like this, to me, is a much better trade than just getting directional and going one way on this. Because, again, all right, they get out this money coming in. It's $2 billion, but it's $2 billion, I think, over 10 years or something like that. It's not coming in all at once. Let's face it. It's not coming in all at once. They're not writing them a check for $2 billion. And I know that's how kind of people on the internet kind of perceive it. Yeah, it's $2 billion over, I don't even know what. Again, to me, they're not writing them a fucking check for $2 billion. So the money isn't there now. And look, I know everything trades on future revenue, but, is there enough sustained catalyst in this to make it continue to go? That's why I think the trade is more of a neutral one than, just going one-sided. And then look, if you're that bullish on it, then don't sell the calls, just sell the puts. Because you're getting paid. I mean, this is a good IV rank. Options in here are pretty liquid. I have to say, I've never had really a problem trading this. And that's kind of the way to play this, rather than just get long or just buying calls and then hoping this thing goes. I mean, to me, that's a much better play. So anyway, just throwing that one out there. And that's about all I got. As far as news today, I don't even know. I haven't really been, other than what's been going on in Iran, what other news is really going to move the market? As much as everybody says, we got PCI, API, none of that matters right now. Honestly, none of it means a thing. So anyway, there you go. Hope this helps. Went over a lot today, and hopefully, and I will be back.